Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
All right, folks, this is certainly our world. We are focusing so much on the politics, the geopolitical of our world right now, certainly the last few weeks. But we are also in the midst of earnings season, and we're also in the midst of a market where you've got Wall Street getting a bit of a reality check after a disappointing start of that mega cap earnings season, some concerns over the AI frenzy. Having said that, while the major market averages, we are seeing a fair amount of selling today. One name that's definitely standing out is Mattel. Shares of Mattel are up about 9.5% today after the toy maker reported second quarter adjusted earnings per share that came in ahead of Wall Street estimates. Analysts were also positive on the results, highlighting the company's gross margin performance, which Morgan Stanley said had remained impressive. Second quarter revenue, it was declined to $1.08 billion. Did miss the $1.1 billion average of estimates compiled by Bloomberg by just a little bit. But we want to get into the quarter, the business, so much that's going on. Back with us is Ynon Kreiz. He's Mattel chairman and CEO. As a reminder, Mattel has the brands Barbie, Fisher-Price, Hot Wheels, American Girl, and many more. And I feel like in this very heavy environment, Ynon, we are grateful to talk about the business of toys. Having said that, we are so delighted to have you back. Welcome back. How are you?
Thank you, Carol. Thank you, Tim. Great to be here.
Now, I would say we would be remiss in this heavy environment that we want to just talk a little bit about the environment. You've been to the White House. We have talked politics with you before. You are from Israel. We've talked with you many times since that attack last October. Prime Minister Benjamin Netanyahu, before that joint session of the U.S. Congress. As a CEO, how are you navigating all of this? How are you thinking about the geopolitics that continues to be a part of our world today?
Well, of course, this is an important part of our life these days, especially for me as an Israeli. I keep thinking about the hostages and pray for their release as soon as possible.
What about when it comes to today's speech by Netanyahu? Is this something that's on your radar? It's the fourth time that he's addressed Congress, the first time that he's been in the United States since the war began. As somebody from the country, how is it on your radar?
Of course, it's on my radar. I haven't seen it, to be honest. I've been talking to our investors all morning following our earnings, but it's something I intend to watch later today. And so I'm sure I'll catch up with everything that was said in Congress today and the reactions in America, in Israel, and around the world.
All right, one more question on politics. The U.S. race, which you know has consumed our world, all of the country, the last 3 weeks. The November outcome, does it matter for you as someone who runs a company, a well-known, publicly iconic brand, global company? Does it matter who's in the White House come November for you?
Of course, we are following everything very closely, the election process leading up to the November elections. But as a company, we have a long-standing history of working with all government leaders around the world, not just in the U.S. And we are focused on executing our strategy and confident that we can work with everyone across the political spectrum.
How would your strategy, Ynon, change if we saw former President Trump return to the White House and continue to see perhaps an even harsher stance toward China, increased tariffs, for example, that he's talked about? How would that affect your business?
Well, as a company, our job is to design a flexible organization that can respond and react to market changes. And I'm not commenting specifically about tariffs or China. But in general, this is what we do as a company. We have a very strong supply chain, a very versatile business model, and we are designed to be able to respond to changes in the market, in supply chain, or consumer taste for that matter. And this is something that we've done a really good job at over the last few years to create a flexible and responsive organization that can adjust and operate in different types of environments.
Ynon, what does flexible and responsive mean in terms of geography? Where is your supply chain right now in terms of in China versus other parts of the world? Like, how much of your products that are sold around the world are made in China versus other countries?
In China, we make less than half of our product today. Industry average is about 80 to 85%, so we index meaningfully less than the industry. And we continue to diversify our manufacturing footprint. This is not necessarily in response to any geopolitical risk, but as a company, our job is to create that flexibility. So we're continuing to diversify our manufacturing footprint, our own factories, and some of the vendors that we work with across different geographies to make sure that we have the right capabilities and still the ability to mobilize resources and adjust to opportunities, as well as any changes in cost structure, in tariffs, and capabilities that we are looking to continue to add to strengthen our capability, our offering.
All right. So as promised, let's get to the quarter. Let's get to the business. So talk to us about the quarter that was and the outlook. Tell us about where you are feeling real strength, where you are feeling some challenges.
Well, this was a good second quarter and a good first half of Mattel, with significant gross margin expansion and improved profitability. We continue to strengthen our balance sheet and more than double free cash flow in the trailing 12 months. The industry performed better than we anticipated, and Mattel gained share globally in the second quarter and the first half. And you talked about it before, Carol and Tim, I believe. We spoke about how we continue to position the company for growth. We expect to grow in the second half of the year and reiterated our full year guidance for the company. Looking ahead, we expect to outpace the industry, continue to gain more share in 2024, and grow sales and earnings in 2025.
So talk to us about some of the different brands. Fisher-Price launching, something I grew up with big time, launching its new line, Fisher-Price Wood, recently. How is that being received by retailers and by consumers? And do you anticipate that this could be maybe, a really top seller come the holidays?
Fisher-Price is such an incredible brand. It will be celebrating its 94th anniversary this year. Fisher-Price grew 11% in the second quarter, reflecting the early success of our new strategy, which is working well. We expect Fisher-Price to grow in the second half, to grow for the full year, driven by a new line of the wood segment that you mentioned, that was now expanding globally, more core lines, product that are growing, and new franchises that we're adding to a Little People collector. The brand is just is so much part of culture and has great trust by parents and families. We, in terms of performance in the category, outperformed the industry, gained share in the infant, toddler, and preschool category in the second quarter and the first half, and was the number one. Mattel was the number one toy company globally in the category.
Ynon, what about Hot Wheels? Growth in gross billings for Hot Wheels was relatively weak in the second quarter. Give us an idea of the catalyst. Tell the investing audience about the catalyst for a rebound for the holiday selling season, and if there are any new products or advertising coming to help push it.
Yeah, Hot Wheels is another incredible brand. Hot Wheels is on track for its seventh consecutive record year. We couldn't be more excited and confident about where Hot Wheels is growing. It grew in the second quarter 5%, with more activation planned for the second half. We're growing the adult collector line and more adult product. We're broadening distribution globally for Hot Wheels specifically, as well as the rest of the portfolio. And we expect to accelerate growth in the RC and skate lines, and of course have another season of Hot Wheels Let's Race on Netflix that is launching this fall. So great product, activated by more content, and just a great line by Hot Wheels, on track for its seventh consecutive year of growth.
All right, so Hot Wheels for guys and gals, or kids, boys and girls, but also Barbie for boys and girls, whoever wants it. But let's talk Barbie, which is another one of the iconic brands, Ynon, of certainly of Mattel. Barbie brand. I'm looking at, though, second quarter, right? Sales held back by a 6% decline in global billings for the company's flagship doll segment, which includes Barbie. Tough year-over-year comparisons in the second half. Did the movie, what are you continuing to see in terms of the impact that has had on the Barbie line? And do you expect the brand to return to growth maybe next year?
Barbie is an incredible brand that never sits still. And the movie expanded the audience even more, as you would imagine. Barbie was the #1 doll property globally and continued to gain share in the second quarter. This year, we're celebrating Barbie's 65th anniversary with multiple activations and a new brand campaign that we're launching in the fall. We're launching also new segments supported by more shelf space in the second half, so Barbie will have even more reach into in the marketplace. We're launching a new offering for adult collectors as well as we did for Hot Wheels, and there will be more content on Netflix targeting the kids' audience. Barbie has consistently gained global share and continued to strengthen its position as the leader in the dolls category. And you know, Carol, very few brands have the cultural relevance as Barbie. And we couldn't be more confident about this incredible franchise and where it will go from here.
Well, I have to tell you, Ynon, in the newsroom earlier this morning, a bunch of us, I will say all women, Cece, myself, and Elizabeth having a conversation. I was kind of very much into Barbie, but I also talked about American Girl, where my daughter was kind of all over it, and so was Cece and Elizabeth. Anyway, we talked for a while about this. I am curious about American Girl, where it still fits into your portfolio, because it's interesting. It has evolved, and we kind of went back to the beginning of the brand before it was even owned by you guys, about that it really, taught young individuals, young women, young girls about history. And, they were very much tied to it. Now you've got a Gap American Girl, you've got Disney collaborations. What's the thinking around American Girl?
American Girl is a valued asset within the Mattel portfolio with significant fan base and great product. American Girl grew for the second quarter in a row, and we saw how American Girl is outpacing the industry in the large doll category and the overall doll category, especially in the 18-inch dolls, and was up double digit. We saw the flagship stores up, especially the new store in LA that was up high double digit. And we continue to optimize the retail footprint to make sure that we are creating a holistic omni-channel experience for fans. And as you say, part of the success is how we evolve the brand and how we infuse brand purpose, but also cultural relevance. And this is part of our secret sauce in the Mattel playbook, and how we continue to stay relevant and take brands that are timeless and make them timely, and reach and engage consumers today and touch fans everywhere, touch their heart and mind, and do things that really matter in society and engage fans at an emotional level.
I have to ask you, I know there's been a Wall Street Barbie. I don't know that there's been an American Girl who works in investment banking. But having said that, a report on Monday that you guys have received a takeover approach from L Catterton, the private equity firm backed by LVMH. You've come out and said that you believe the company can achieve a higher market value if it continues as an independent company. Are you open? First of all, have they approached you? And are you open to doing a deal?
Well, as you would expect, we don't comment on speculation.
It's
but
just
what
you
I
and
can
me
say,
now, Ynon. It's just you and me.
So just between us, just between the three of us, what I can say is that we're very confident in Mattel's strategy and our ability to create long-term shareholder value as a standalone company. This is what we're doing. You're seeing it in the quarter. You're seeing it at the start of this year. And you're seeing it since the start of the turnaround in 2018. It's in the numbers. It's in our growth in top line by $1 billion. It's how we continue to improve our adjusted gross margin by almost 1,000 basis points and guided to a higher number, another 100 to 150 points this year. Adjusted EBITDA grew 7.5 times since we started the turnaround. And our free cash flow went from a negative $325 million to more than $700 million at the end of last year.
Yeah.
And of course, we are now investment grade.
So it's not just
we're very well positioned.
So it's not just
Sorry.
about price, maybe a better price?
Well, it's about creating long-term shareholder value. And we are well positioned to build on our multi-year trajectory and continue to execute our strategy and expect the share price to reflect this over time.
What would make you do a deal?
Well, broadly speaking, we are here to create long-term shareholder value. And we do it in every day. This is what we focused on. And we consistently execute and deliver on the strategy. That's what we focused on. And we believe that we create that value, long-term shareholder value, as a standalone company.
So to that point, Lena Dunham stepping away from the Polly Pocket movie, what are your plans for that brand? And tell us what's the next, big screen. And, I think you guys have a ton of projects in the works. What can we look forward to?
Yes, we're very excited by the progress we're seeing in our film strategy, Mattel Films. Of course, the Barbie movie set the scene, but there's so much more. And we currently have 16 projects in the making. We recently announced a release date for Masters of the Universe. This will be June 5th of 2026. We announced a new director for Matchbox and a new movie for Monster High at Universal with Akiva Goldsman, a two-time Oscar-winning writer and producer. So there's a lot that is going on with everything at Mattel Films. The Polly Pocket project is progressing. Lily Collins is still attached, and we're very excited about how this movie is shaping up, as well as the rest of the film slate. That again is all about collaborating with leading filmmakers to make standout quality movies based on our iconic brands that will resonate in culture and appeal to global audiences.
Ynon, Ken wants to know, does he get a movie?
Well, of course, we continue to look for opportunities to engage fans every way we can. And one day maybe you will have a movie as well.
I'm
never know.
hoping. I'm going to count on you. Maybe you can
had
help me with
You
that.
had a Hot Wheels on your desk, but you gave it to my son.
I've had little cameos in movies, courtesy of Bloomberg Programming. Ynon, thank you as well. A lot on your plate. So appreciate all the time you always give us and find for us. Great to check in with you. Ynon Kreiz, of course, folks. He is the CEO and chairman of Mattel, joining us. As we said, Mattel shares are up 9%. They're up almost 16% this week, 15% pop on Monday, courtesy of some, maybe that there
deal
could
chatter.
be a
Deal chatter. How does that sound?
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Our next guest is the CEO of the largest company that you've probably never heard of unless you work in the industry. Burns & McDonnell is an engineering, architecture, construction, and environmental and consulting firm that plays in just a ton of industries. We're talking aviation infrastructure, healthcare, military construction, consumer product manufacturing, food and beverage production, oil, gas, chemicals, renewable energy, telecommunications, and more.
Kind of the economy in a snapshot. It's 100% employee owned. They've got more than 70 offices in the U.S. and around the world. Needless to say, Leslie Duke has a good idea. She's probably got a great idea of how economies, Tim, around the world are doing.
Welcome, Leslie Duke, CEO of Burns & McDonnell, based in Kansas City, but joining us here in our Bloomberg Interactive Brokers studio. How are you?
Very good, Tim. Thank you so much for having me. It's good to be here with you both today, and I look forward to visiting with, I think, some very interesting things going on in the energy and data center markets. It's a really fascinating time.
Yeah, we talk a lot about energy and data centers because data centers are using so much energy. We're going to get to that in just a minute, but I want to start big picture because, as I mentioned, you guys play in everything. So you have a really good understanding of how economies around the world are doing. At a high level, what are you seeing out there, specifically in the U.S.?
Sure, we're mostly domestically focused, so I think I have a pretty good pulse on the U.S. marketplace. Things are busy in the infrastructure business. We're soliciting and receiving a lot of work still. I think there was a little bit of a slowdown in the second quarter would be what I would feel, maybe a little into first quarter. We're back to a nice rhythm of work coming through our doors. Construction has been robust throughout. And a lot of people ask me about the election and how that's impacting our business. And we do think there's some finance that's slowed down. People are kind of waiting on some things. But generally speaking, there's still a lot to do. So some of the funding that's come out of the government recently, the IIJA and IRA funding, has really fueled a lot of projects in our industry. And
so that's been good for business.
It has been great for business. And I think that it's also, we're a little bit of a counter economy business as it is. So we're resilient in that way. But I think that then there are these other business, renewable energy or data centers that are coming in at a time where other things may be slowing down. And when you have the diversity Burns & Mac does, you are able to swing your workforce over and start to respond to things that are very, very hot right now. And we certainly are seeing that across the board when it comes to both.
When you do a project, though, I mean, how long does it go on for? So it kind of gives you a certain amount of lead time, right? When you say that you guys are kind of counter the economy in terms of what's going on, the cycles, give us an idea, remind us.
Sure, it depends on the project. So there's some that are pretty quick hitters. Data, for example, is very fast moving. They can build a data center in less than 2 years. Now,
because it's basically a box with a bunch of machines.
A box and a bunch of machines. Now they do need a lot of power.
If you can get the electricity
That's
for
right.
it.
They need power.
If you can get the electricity for it, yeah.
That's exactly right. And power is really, we laugh a lot about it, but it is becoming extremely constrained because the need is growing. The hyperscale is real. So the scarcity of places in the United States that can actually attract hyperscale is shrinking. So it's harder and harder to find a place you can put a hyperscale data center.
So is that constraining the development of data centers right now, the build out?
It is changing the way that they're looking at how they need to get ahead of it. So I think there's a much broader look at how to approach data and power, including owning it themselves. So data may not wait on an electric utility today, and they may start to own their own power island. Off-grid, maybe use the grid for reliability and backup power, but not primary generation. So I think the data centers are being extremely creative right now in what they're willing to consider in the way that they keep this business going. It's fast-paced, it's not slowing down, it's highly competitive. They can't afford in some cases to wait for the utility process, the regulatory hurdles are real. And so those are things that are really headwinds to data if data doesn't take charge. And so then you've got utilities that are like, hey, we don't want to lose that load. We want to continue to attract businesses into our business. And so they're upping the ante. They're trying to bring power faster.
But is it helping then to build that renewable power faster? Because we have seen folks, whether I think it's in Amazon and some others, if they obviously need the data centers, and then they're linking up with those who have, access to the renewable power side.
Sure. I think, we've never been busier in renewable. And so the renewable business is, all utilities are pivoting to a greener future and a carbon-free future. So that's been a part of our business here in recent years that has really motivated a lot of business for us. All of big data is interested in green energy. So when they're ahead of it and they have capacity in that, then it follows suit that data is going to be attracted to them. And then we do see a resurgence of natural gas coming in to do some backup power. Bridge fuel is what we tend to call it, where we know it's going to take longer to get some of the bigger clean fuel, the base load generation that can be built
to bridge it until you get it, basically.
Right. So I think natural gas is the solution for that. And I even think that you see data accepting that to some degree. And it used to be kind of a polarizing political issue. Yeah. Both sides of the aisle are saying, yes, we get it. To stabilize and have reliable power, we've got to accept that natural gas is going to get us there. And some of the things like modular reactors, small modular reactors. We love SMR as a technology, but the runway's long, right? It's going to take time.
The problem is we haven't seen any of them built to fruition at this point.
That's right. It's an unproven and even just take the regulatory process. Right. Well, how patient is data going to be? And so they have to have a solution today that can get them what they need as soon as they can get it. They need to have power to interconnect to. But they have the investment dollars that could kickstart that. And I think that we're finding some interesting conversations going on with the long-term picture, because this is the beginning. I mean, with we're talking about AI, but it's e-commerce, it's cloud computing, it's
everybody, right?
So many things. And so this is a trajectory that they're in the long game for. And so I think you're going to see short game, long game, natural gas short game, and then we'll see what emerges in the long game for cleaner, carbon-free solutions. I'm real excited about the possibilities.
Do you think that, and you said, support for a bridge fuel to get us to a greener future is bipartisan. No question, though, that Republicans are more supportive of fossil fuels. We saw that just last week at the RNC and the conversation around that from the speeches. Are you concerned that if Republicans do retake the White House, green energy and investment in green energy will get pushed back, will slow down? I'm
not. And I think it could create a bit of a change. Sure, regulatory, it always matters, but the truth is that the consumer's committed to it and companies are committed to it. Our utilities are committed to it. Most have named dates that they want to have their goals met by. They're all marching quickly towards those goals, striving to get there. Those things are resilient to the politics of the time. And so I do believe you're going to see it continue. And even during the Trump administration, we never saw larger growth in solar than we did during his term as president. And that's just because of this tenacious appetite for clean energy that the world has. So I don't see that slowing down. And I think that there's a more pragmatic approach in some ways to renewable energies, needing some backup, reliable power to make sure that you can continue to invest in renewables and not become disruptive.
Because of your vantage point, as Tim said, largest company you probably never heard of, but you probably should have heard it because of the different types of industries you play into. What about your business and what you are seeing do you think might surprise the Bloomberg audience?
I think probably how much of the value stream we're involved in. Everybody knows us. We're number one in power. We're number two in data as an engineer construction company. So everybody that does know Burns & Mac knows us there. But I would say most people would probably be surprised at how far upstream we go in the consultancy side of studying the power grids in the United States, really helping utilities and other interconnect companies come into the right power purchase agreements. We're very much in the permitting side of air and land permitting. So we really have a perspective that really is ahead of what's coming in our consultancy group. We call it our 1898 and Co. That's the year we were founded 126 years ago. But I think that's always a little surprising to people that haven't tapped into that brain of Burns & Max.
Not to be confused with an offshoot of the Kevin Costner.
Exactly. Very confusing.
I was seeing on the website. Sure. Yeah, it's not. The Dutton family. It's not an offshoot of the Dutton family. I do want to know about revenue, where the revenue comes from, in terms of private industry customers coming after you, your customers who are in private sector, versus municipalities, states, and the federal government.
Sure, it's a great question. I'll start with the last and say, municipalities and the federal government, they've really, found funding in some of the recent government action. And so there's a pretty robust amount of government work coming out. So we see a lot going on there. We see an enormous amount of work in manufacturing. That's a broad bucket of business, but it gets real surgical when you start looking at it. It's reshoring of products that we learned we needed to build here in the U.S.
Is that continuing, that trend?
It is continuing. You can see it in land prices in the right places. Logistic companies are really seeing, land prices go up. So manufacturing is real. And then even like in our refining space, the focus on renewable fuels and feedstock that's renewable. And so some of that is super interesting. I think people would be really thrilled at the work that's being done there and the amount of time and energy going into trying to reframe the game. And I think airlines are at the tip of that. They really are very interested, very mindful of the environment around us, and they're trying to figure out how they can pivot to renewable fuels. So there's exciting things going on in any microcosm of our markets, but
Right.
when you really look closer, what's driving it, it's not that dissimilar. And so people are focused on trying to clean things up and get things regulated. And I believe in a carbon-free future that is possible if we keep down this road. And so I think it's exciting times.
Some would say we don't have a choice
That's right.
based on what's going on. Hey, Leslie, just got about 30 seconds left here. Because you have such a great window into so much of what's going on, and I know you say you're kind of counter to the economy or what's going on potentially. Any signs of slowdown, recession? Give us an idea. We are Bloomberg. We always look for these metrics.
We are not seeing significant slowdown. And so, I think if we see headwinds, it's in some of the procurement streams. Some of the global procurement that we do is seeing continued strife and difficulty, electronics in particular. Yeah. We are really struggling. And by the way, the world is electrical. I say the world is run by electrical engineers. They just haven't figured it out yet. But everything's becoming electrified. And so you look at cars, we talk about that all the time, but it's not just that. It's automation in every walk of our lives. And those things are really struggling in a global economy. And the logistics of electronics is still something that's we're struggling to meet demand. And it is the long lead items on all of our projects, regardless of industry and marketplace.
Leslie, really appreciate you joining us.
Thank
Leslie
you for
Duke,
having me.
CEO of Burns & McDonnell, based in Kansas City, here in our Bloomberg Interactive Brokers studio.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody.
TikTok,
as I like to say.
Is it TikTok?
It is.
All right.
Man, a lot going on. As you know, there's about 12 minutes left in today's trading session. Charlie just breaking down the trade. We are hovering near our lows of the session, so that means 3.3% lower on the NASDAQ 100, 2.2% lower on the S&P 500, 1.2% lower on the Dow Jones Industrial Average. Just rehashing those numbers because we haven't seen this kind of selling in some time. In fact, if you look at the NASDAQ 100, last time we saw we were down this much. This is, I guess, the most in terms of a decline since October of 2022. So not quite 2 full years, but getting close, about 1.5 or so.
The S&P only up 14% so far this year.
Only. And listen, markets go up, markets go down, right? And some say buying opportunity or not, or is it a reset? Like but we're still kind of early-ish in earnings.
Yeah, I think it's fair to say. Let's see what Neville Javeri has to say. He's equity portfolio manager at Allspring Global Investments. They've got about $570 billion in assets under management. Usually he's hanging out just outside of Washington, D.C., but he's joining us here.
Nothing going on there.
Don't go to Paris right now, and maybe, if you don't want to go see the Olympics, and maybe stay out of Washington if you want.
Different kind of game going on.
There certainly is. Neville, good to have you with us. What did you make of the way that Carol described the environment? Is it a buying opportunity now? At the same time, we are just at the start of earnings season, and boy, that Mag 7, the two stocks that reported yesterday, Alphabet and Tesla, certainly putting a different kind of tone in the market today.
Yeah, thanks for having me, Tim. Thanks for having me, Carol. I think what you're seeing is a little continuation of what started in the post-market last afternoon when both Tesla and Alphabet reported. I think there may have been a little bit of AI fatigue that's sort of playing out today. I think Alphabet's print and guide was pretty solid. Really good numbers, margins were good, they raised guidance. It was a solid print, there was a solid guide. I think the one thing that sort of concerned investors and led to the sell-off was the fact that they talked about that the investments that they were making thus far,
the CapEx spending
in AI, were not paying off, and that timeline is being pushed further to the right.
You think that's more of a concern than the miss on YouTube ad revenue?
I think
YouTube revenue.
I think Alphabet's doing what Alphabet has done historically, right? In search and ad, and then YouTube was weak, and then sort of the concern was the spending on the capex that was spent on AI, where you weren't having quite the return that both management and then investors looked at and said, maybe this is pushed out a little bit to the right, and then you're seeing that play out today with some of the other hyperscalers. You're seeing it in big cap tech, and you're seeing it sort of play through in the market this afternoon. So,
I mean, how are we supposed to, as investors? I mean, this is something I feel like you and I talk a lot about. We're so quarter to quarter focused. I feel like if you go back 6 months, 8 months, last year, if you weren't spending on AI, you were kind of smacked down because you might be behind the curve. So is it just a case of, what's the right balance between spending and payoff? Do we not get enough clarity about the spending that Google is doing when it's connected to AI and whether or not it's seeing that return on investment?
Yeah, I think if you look back or you listen back to some of the transcripts and the earnings calls going back a year, if you threw the word AI in there, it almost helped your stock price.
Yeah, you're right.
So I think now you've got.
So now that you've done it,
Long Island Iced Tea blockchain company.
Yeah.
Remember that? 6 or 7 years ago.
You've gotten to a point where investors are starting to question, how much of this is necessary? How's it playing out? And really, what are the benefits? Can we absorb this in our business, use it, become more productive, become more efficient? And I think those questions are starting to bubble up a little bit more. And then what Google said, Alphabet said last afternoon sort of really set off a greater level of scrutiny in these investments around AI.
Okay, we love having you come on because you brought stocks. And just so everybody knows, if you bring stocks,
cookies, but no,
if you bring stocks, we love you. We like stocks more than socks. Okay, UPS.
Yeah.
What a good day to talk about UPS because yesterday it closed down 12%.
Yeah.
Worst stock decline in 25 years.
Yeah. You're still bullish though.
Yeah. Oh, we like it. I think it was an overreaction. There's plenty of good stuff there. They're investing in network of the future. They've made significant investments in their Frankfurt hub. That's going to tie Europe to Asia. They monetize the brokerage business. They're reinstituting a share buyback. And then, a lot of this is digesting the costs from the labor union agreement that they signed last year. So some of that will be behind them in the coming year, and they're going to exit the year with 10+% margins on the domestic side. So there's plenty of good stuff out there. I think investors would just focus on the fact that expenses were higher than where they should be.
The packages it's shipping, though, are smaller and less profitable. Is that a worrisome, or is it just a...
Some of it, Carol, some of it just because... what they said was there was a certain type of business owner that was moving from next day air to ground, and then there was a certain profile that was moving from ground to shore post. So yeah, that's going to play out. The contract that they signed with the USPS is going to be incrementally additive.
It's expensive.
It is, and it's going to come online at the back half of the year, and you're going to see those benefits.
Before we let you go, gosh, Carol, there's so many I want to choose from.
Where do you want to go?
I want to go to Hilton. I want to go to Hilton.
You choose.
Yeah, we could do Union Pacific. They report tomorrow, but let's do Hilton. It's up 19% so far this year. We don't hear from them till August. Yeah. What's going on with Hilton?
Great franchise, asset-light model. They've been bringing on, they have the whole spectrum from sort of the consumer to business, low end to the luxury portfolio. Business travel has actually been a strong point for them. You have people going on business trips, staying overnight longer than they did. So instead of a 2-night visit, it's now maybe 3 or 4.
We are traveling a lot.
We are traveling a lot more than we have in a while. Yeah. It's interesting.
So it's not just us.
So it doesn't matter if the revenge travel is over?
I don't think it's over.
You don't
I still
think
it's playing out. The hybrid work week helps. People working 3 days remote and being able to travel, work from elsewhere.
I hear a lot of people on business trips taking like a significant other.
Really?
Not us.
Oh my God. Hold on. We can do that?
What do they call that when people they take?
Yeah, but then you got to take your kids.
There's a word for it. Yeah. Then you got to take your kids.
Your kids. Yeah. You got to take your kids.
Nice to have you here.
Thank you so much for having me. Appreciate it.
Yeah, Neville, come back. Appreciate it.
All right, Neville Javeri. He's an equity portfolio manager at Allspring Global Investments, $570 billion in assets under management, joining us right here in our studio.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.